Larry Fink, the largest asset manager in the world, buy Bitcoin. Ray Dalio, largest fund manager in the world, buy Bitcoin. President Trump, president of the United States, buy Bitcoin. Your cousin, oh, Bitcoin's a scam.
It's so true.
And it's like, look, guys, like things change. And like, you need to change your mind. Like Michael Saylor was against Bitcoin in 2013, right? He changed his mind. And so intelligence really is the signal of you being able to change your mind and take action. Bitcoin will continue to go up faster than fine art or collectibles or gold or real estate. And so that basket by 2030 should be about 1.3 quadrillion. By 2040 should be about 3.5 quadrillion. So the question then becomes, like a venture capital perspective, if that's the total addressable market, what percentage could Bitcoin capture of that market? So if Bitcoin can get 1.25% of that basket, 1%, by 2030, that would put it on par with gold at about $21 trillion, or it'd be $1 million per Bitcoin. By 2040, which is about 15 years from now, if Bitcoin could get 8% of that basket, it would put it on pace to be about $14 million per Bitcoin.
Mark Moss opens with a powerful truth. The decline of the US dollar isn't an event, it's a process. Contrary to what many gold bugs and financial doomers claim, the dollar isn't about to vanish overnight. There's no switch to flip where suddenly your cash becomes worthless and the global system implodes. What we're seeing is a slow, deliberate weakening of the dollar over time, and in many ways, that's intentional.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I'm an optimist. I believe that the future is so abundant. We are about to see the greatest era of prosperity in front of us. But there's a lot of doomers, and they're going to warn you about the market crash coming and the end of the dollar, like it's some imminent event. Like any day now, the dollar is going to crash, the world's going to be over, the financial market's going to crash like any day. And it's this doomer narrative that really came from the gold space. The only way to sell gold is to tell you that everything is going to fall apart and there's this doomsday scenario where you need gold. But Bitcoin is technology. Bitcoin is about hope. And so what I was talking about is, yes, the dollar is crashing. It's a process, it's not an event. It's not like in 12 months or 24 months it's gonna happen. It's happening. The dollar continues to lose purchasing power. And in that video specifically, I was talking about how the US government actually wants the dollar to continue to devalue. They want it to get weaker. And when you look at the dollar's strength as measured as the Dixie, measured to other currencies, we can see that we're pretty high historically. The dollar's very strong compared to historical median right now. And so we wanna bring that down to a more historical level, which might be a 15 to 20% devaluation from here. And so when that devalues, then the converse of that is asset prices go up. Now, not all asset prices go up at the same rate. Bitcoin is the most sensitive to that global liquidity. So as the dollar goes down and the global liquidity goes up, then Bitcoin will go up at a faster rate. The dollar measured against the Dixie, the dollar index, so that's measured against other currencies. So when you measure the dollar against the euro, which is the main component of that basket, or the yuan, or the, whatever, the peso, the bolivar, whatever, when you compare the dollar to other currencies, it's very strong. When you compare the dollar to gold, or to Bitcoin, or to real estate, it's very weak. So when you look at charts and you see the dollar's devalued 90%, 90% compared to what? Compared to hard assets like gold. But it's strong compared to other currencies. And the reason why that matters is because we're talking about resetting global trade. And so when you're trading, when the US is trading with China, if the dollar's too strong, it makes our exports too expensive. So nobody wants to buy our exports. If the dollar gets weaker, it's easier for us to trade, right? And that's why we get these currency wars happening between these nations, because each nation is trying to make their own trade balance, their own goods more competitive on the global stage. So yes, so they're trying to make it weaker to other currencies. And when I said it's already weaker, when you look at it compared to other currencies, it's historically high right now. And they want to weaken it compared to other currencies, which will also weaken it to gold and Bitcoin and houses, etc. Basically, if we look at, as the world continues to increase the money supply, that money goes somewhere. We don't want money, we want the goods and services that buys us. So as they increase the money, the basket of goods, it appreciates. So right now we look at store of value assets, and they're about a quadrillion, $1,000 trillion. So that's gold, art, real estate, equities, bonds, cash, etc. If we continue on the path of increasing the money supply that we've been on at about 10% a year, so we go, okay, so the money supply expands by about 10% a year. That basket expands about 10% a year, but not each asset goes up at the same rate. So Bitcoin is the most sensitive to global liquidity. It's going up at about 8.9 times sensitivity compared to gold's about 1.4% times, something like that. I project that Bitcoin will continue to go up faster than fine art or collectibles or gold or real estate. And so that basket by 2030 should be about 1.3 quadrillion. By 2040 should be about 3.5 quadrillion. So the question then becomes, like a venture capital perspective, if that's the total addressable market, what percentage could Bitcoin capture of that market? So if Bitcoin can get 1.25% of that basket, 1%, by 2030, that would put it on par with gold at about $21 trillion, or it'd be $1 million per Bitcoin. By 2040, which is about 15 years from now, if Bitcoin could get 8% of that basket, it would put it on pace to be about $14 million per Bitcoin. Now, is 8% realistic, or does that seem too big? Well, if we look at it from that lens, we know that Uber and Airbnb both captured 10% of their market in less than 10 years. So we're talking about Bitcoin getting only 8% in decades. And so to me, it seems sort of bearish, sort of conservative, but those would be some projections that I'm looking at. Larry Fink, the largest asset manager in the world, buy Bitcoin. Ray Dalio, largest fund manager in the world, buy Bitcoin. President Trump, president of the United States, buy Bitcoin. Your cousin, oh, Bitcoin's a scam.
It's so true.
And it's like, look, guys, like things change. And like, you need to change your mind. Like Michael Saylor was against Bitcoin in 2013, right? He changed his mind. And so intelligence really is the signal of you being able to change your mind and take action. And so I think that's the single biggest thing that's gonna hold people back. Understands it's the most, I would say 30 to 50-year-old range, because they're old enough to have seen the damage done by the great financial crash, understand the dangers of the fiat system, but still young enough to grasp technology and how it's reshaping things. And so there's sort of this middle generation. They saw the world before the internet and they understand the dangers of fiat. They still understand gold a little bit, but then they understand the tech. Obviously the younger generation, the 16-year-olds, they were just raised on it. They don't know any different, but doesn't mean they understand it. They don't understand the need for it, the mechanism of it. So I'd say probably the 30 to 50-year-old generation.
Mark Moss makes an astute observation. The demographic best positioned to understand what's happening and act on it are those aged 30 to 50. Why? Because they've lived through the analog world, witnessed the 2008 financial collapse, and now fully grasp the rise of digital technology. Younger generations may be fluent in tech, but often lack historical and financial perspective.
I do think that Bitcoin eventually becomes the unit of account that we start to price things in. I'm predicting that happens somewhere around 2050, maybe a little bit past, so about 25 years from now. Already a lot of Bitcoiners that we know already price things in sats already. I was talking, maybe a little spoiler alert, but I was talking with Marty Bent earlier, and he's working on a product that everything that you look at on the website instantly converts dollars into sats.
No way.
So we can start to be seeing it that way. But I think that we'll eventually price everything in sats, and I think that's about 25 years, but no reason to price that in gold. We'll break down my total portfolio, and then we'll break down the Bitcoin side of it.
Okay.
First thing I would say is that there's levels to this game. So you see a lot of people on Twitter or X talking about, sell your chairs, go all in on Bitcoin, and that's cool when you got a couple $1,000, right? If you have a couple 100 million, obviously you own different things. For me personally, it's my businesses, so multiple businesses that I have. That's one. Real estate is another piece of it. And then the third is my Bitcoin sort of tech plays. The business side is where we make the money. That's where we create the wealth. And then I buy real estate for tax efficiency. So I buy real estate so I don't have to pay tax on the money that I make. And then the after-tax dollars, which are more money, then those goes into some of these Bitcoin tech plays. So on that side, it's specifically Bitcoin, pretty much all Bitcoin. And then I have a fund, so the Bitcoin Opportunity Fund. So we're investing into businesses that are building on and around the Bitcoin ecosystem. So the majority of that in Bitcoin, some of that in the fund where we're investing into these businesses that are building on and around Bitcoin. And then a smaller piece that's in some of the more speculative plays. So a lot of these Bitcoin treasury plays. So we're getting into all of those, both in the fund and personally, I'm investing into these companies as well. There's some convergence of AI and Bitcoin coming together where AI agents are working with Bitcoin directly. So I'm investing into some of that as well. And those are small percentages of my portfolio, but the majority of that would just be Bitcoin. Around 2030 is where I think this will really start to take off. And so already we're seeing, so for example, a big area that we invest in is Bitcoin mining. And in the Bitcoin mining space, we have data centers. And a lot of them are now bringing on AI data centers, high compute is what we call it. So we're already starting to see sort of these Bitcoin miners be Bitcoin and AI data centers, if you will. So some convergence there. But specifically what I'm thinking is that Bitcoin is open, borderless, permissionless, all of these things. It's also personless. So you don't have to be a person to have a bank account. And so now we have the rise of autonomous AI agents. So I can basically program an AI agent to go hire other AI agents to go do tasks for me. Research, write, build websites, run marketing campaigns, things like that.
And you would pay them in Bitcoin?
Well, yes. So I would give my agent the ability to go do all these transactions on my behalf, and they can have a wallet and it can have Bitcoin. And it can go do these things and it can spend the Bitcoin. It can hire other AI agents to go do these things for me. And we've already started to see this. So for example, one AI agent, this has already been done, can go do research and find the best online business. Then it can go write the business plan. Then it can go find domain names to match. And it went and it bought the domain name using Lightning to do that. So we're already starting to see this happen. Part of the reason why is it can't use the fiat system for this. An AI agent can't have a bank account. But more specifically, you can't do microtransactions at high frequency with the fiat system. And so in order for these AI agents to do these high frequency transactions, microtransactions, it's going to need something like Bitcoin to do that. So I think that's going to be over the next probably 12 to 24 months, is going to be an area that's going to rapidly grow. Debt, and we have GDP. So there's a ratio. And so right now we're at, roughly almost 120% debt to GDP ratio, but that's a ratio. So we could either lower the debt or we could raise the GDP. So that's what they're talking about, growing our way out of it. And there's two ways that they do that. Number one, unleashing productivity. So bringing manufacturing back to the US. In order for the US to be competitive with manufacturing, we need AI, we need automation. So there's a lot of wealth that will be created there, a lot of efficiency gains. But number two, inflation. So when they inflate the money supply, it pushes the cost of goods up. And by making things more expensive, the GDP also goes up. And so that's what they mean by growing our way out of this. It means a lot more inflation coming on top of the prosperity as well.
Moss predicts that by 2050, the world will start pricing goods and services directly in Satoshis, the smallest unit of Bitcoin. Some early adopters already do. One of his peers is even building a platform that automatically converts dollar prices into sats, helping normalize this shift in mental accounting. And this isn't a gimmick. It's a psychological transition, one that reinforces Bitcoin's role not just as a store of value, but eventually as a unit of account.